video to help students understand audit opinions and different levels of assurance. This is an area that many students are confused by. So we will start by looking at the course notes, and we are here on page 25 course notes, and we're talking about levels of assurance to start with. So this is determined, the level of assurance is determined by how detailed the audit or the review is. Okay, how much depth, how much work is done in order to arrive at a conclusion. Okay, and we have two options. Either we can give reasonable assurance or we can give limited assurance. And the level of assurance depends on how much work we do. Okay, so a reasonable assurance audit, a reasonable assurance opinion would come from, for example, a statutory audit where we have to do the audit. And what does the audit do? It performs the following procedures. So obtaining an understanding of the entity, assessing risk, responding to risk, performing further procedures such as sampling to draw a conclusion. But a lot of work is done. And that is in order to generate a positive expression or a positive level of assurance, a reasonable assurance. In our opinion, internal control is effective in all material respects based on XYZ criteria, or in our opinion, the financial statements are true and fair. Okay, we've done enough work in order to say, yes, they are true and fair. It's positive, they are true and fair. Okay. And then we have the option of limited assurance. This is when we only do limited procedures in order to arrive at a conclusion. And as a result of only doing limited procedures, not doing much work, we give a negative expression. So a negative expression, based on our work, nothing has come to our attention that causes us to believe that internal control is not effective in all material respects based on XYZ criteria. So nothing has come to our attention. That is much weaker. It's a very weak opinion. It's called a negative expression because it's saying nothing has come to our attention. We're not being positive. We're not saying the internal control is effective. We are saying nothing has come to our attention to suggest that it's not effective. So we've had a look, but we didn't find anything that suggests the problem. So it's probably okay, right? So it's a weak conclusion. Now, that's the first thing to understand here. We're talking about levels of assurance. How strong is our opinion? Okay, reasonable assurance enables us to give a positive expression to say that financial statements are true and fair. Okay, and so a statutory audit gives reasonable assurance. So this is the first thing you need to know about. Okay, so once you have understood that, you can go on to look at the different audit opinions, okay, of a statutory audit. So if you go to page 278, okay, you want opinions. Now these are reasonable assurance audit opinions. An audit is a reasonable assurance engagement. So all of these are the result, an opinion that has resulted from a review which gives reasonable assurance. Okay, and we've got the different opinions. And the opinions depend on the findings of the audit engagement. Okay, so we'll start just following through this diagram. So audit reports. You can have a standard report with an unmodified opinion. That means there's no problem. Everything is true and fair. There are no problems identified in the audit. Everything is perfect. So unmodified opinion. We don't make any changes or alterations to our opinion. We say the financial statements are true and fair based on the review that we've done, the audit engagement that we've done. Okay, in all material respects. Okay. Now, sometimes we have to make changes to the report. Okay, and changes to our opinion. Okay, so we can, looking here, look at things that change our opinion first. Okay, so looking at things that change our opinion, we might not have got enough evidence, audit evidence, in order to conclude. Okay, so that's the problem, because we weren't given the information we needed. Okay, now it could be that we were not given information about certain things, in which case we produce a qualified opinion saying there are some problems. These are this, and this. So the financial statements are true and fair except for these specific problem areas where we did not receive enough audit evidence, insufficient or inappropriate audit evidence, and we have produced a qualified opinion. Qualified means that there's a problem. a small problem or a specific problem. And then material and pervasive. This means we didn't get any audit evidence. So, for example, the finance department, there was a fire, and all of the computer records and everything just disappeared. And then we have a disclaimer. We cannot express an opinion. We do not express an opinion because we did not have the audit evidence to enable us to express an opinion. Okay. So this is all to do with not having audit evidence. Okay. Now here we move on to where we do not agree with the financial statements. We think they are misstated. So again, we can have a qualified opinion where it's just one specific thing that's misstated, or we can have an adverse opinion where we say the financial statements do not give a true and fair view. Okay, that's a very bad opinion. They do not give us a true and fair view. Okay, we're being very definite about that. Okay. And then we can have unmodified opinions with an additional communication. So this is where there's nothing. Our opinion. We want to draw the readers or the user of the financial statements. We want to draw their attention to some specific issues. So we have emphasis of matter paragraph and other matter paragraph. So both of these, the opinion is not modified. It's not modified. And we'll just have a quick look just to see the difference between emphasis of matter and other matter. So if you go to 189, you will get, sorry, I think I mean 289, you get emphasis of matter. So this is where there is something that's in the financial statements and we're happy with the way it's been presented or disclosed, but it's very important. We think that it should be highlighted and drawn to the attention of the users. For example, uncertainty regarding some litigation, a significant subsequent event, early application of an accounting standard, or a major catastrophe. Okay, and if there is a concern regarding going concern, the continuity of the company, then we have a specific type of paragraph called material uncertainty related to going concern. Why do we have that? Because it's a big issue if there's a going concern problem. Okay. There's more information on that in section 5. I think I should do a separate recording on that, to be honest. So I just want to keep this one brief and to focus on different types of audit opinions. So other matter paragraph is a paragraph that refers to a matter which is not presented or disclosed in the financial statements, and that is fine, but we still want to draw the user's attention to it. So for example, items like the financial statements have not been audited, previous ones, or they were audited by another auditor. So the difference between emphasis of matter and other matter paragraphs is that other matter paragraphs are not included. The information is not included in the financial statements, whereas with an emphasis of matter, it is included. In both cases, we want to draw the attention to these specific issues. Okay. So is that a little clearer? Any questions about any of that?
No, that's fine.
Okay. Good. So I know that this is an area that people often struggle with, so I hope that you found that useful.
I think to all, I think you did the connections between the areas and the different chapters.